markets are on. Lead the reason markets are on. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps the seeds. Supply demand is mine exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Least precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets are on. Lead the reason markets are on. Lead the reason markets are on.
Good morning, everybody. How are we doing? Happy Friday. It is Friday, the 16th, not the 13th. This morning we're going to go through DAX, etc. How are you all doing? Morning Road, morning Matt, morning Bogtin. How are we doing? Right, DAX is just... Oh, wrong one. DAX has just opened. We've got a break up at the open. Yesterday's high and yesterday's close are pretty much the same place today. So market closed on the high yesterday up here. So there's not a lot of room really upside until we hit upside resistance there. DAX yesterday, first down day, well, not down day, but well, it was a down day, but it's the first sort of retracement we've had in this potential sort of correction. So we had on, where's my pen gone? On Wednesday, that pause candle put in, sorry, Tuesday. Then we put our first lower low and lower high in on Wednesday. Yesterday, we were just about an inside bar. It was a double bottom. So this is looking potentially like it might want to break down and start this correction on this huge multi-day run that we had. So I've got short on as a position trade at the moment as well. Looking for a retracement back into these highs, which is this propulsion move which broke out. So I don't think we're going to get there obviously today. It's going to have to need a hell of a day to get down there. But we'll see. If we get this lower low going today, there's a good chance that the bears are going to start to get involved, and obviously then the bulls will start to take profits on their legs that they're in. So we'll see where we go. So today what I'd like to see is an upside rejection. If we can double top it, or ideally come out of this propulsion move here, which isn't really one because that's the close. So we're basically gapped down today. So yeah, we'll see if we can just break straight down. That would be lovely. And see if we get that bear move started. Just looking at the ADRs and everything. Morning wish check. Steve, how are we doing? There's nothing ADR wise today at all. There's been not a lot of movement this week. As you can see, the average weekly ranges, excluding silver, which seems to do it every week. We've had oil has gone beyond its weekly range. Had that very big, strong push to the upside on there, which has corrected massively yesterday. Huge correction. Sorry, well, yeah, continued yesterday, but huge correction there with the inventories. But the only things really we've got that have done weekly ranges are yen pairs. So Swiss yen, obviously there we've done 100% of our weekly range. Euro yen, same 100%, and the pound yen. So There is potential basically for either a stall out or a correction back up here. The question is this move a pullback continuation? Possibly. So we're just pulling back with a new leg up, same as we have done for weeks now. Or is this the start of that market structure reversal? So we'll wait and see what happens with that. I've taken some profits this week on some yen pairs. Swiss yen, I got out of Swiss yen yesterday, and I got out of euro yen this morning. So I'm out of my yen, so I'm flat. And I'm not. I've still got 1 euro yen on. Which I presume is now a long, a short. No, it's still a short. Just quickly look at that. Why did that take a single? It's interesting. Why did we not close out the second part of that? I'll do it now. Take the second part of that off. Not quite sure why I only closed one of those. US dollar yen, I'm also in short as well still. Not too concerned about that. It's in profit. Just actually let me quickly look at the swaps on that. Might be worth taking. I'm going to do a partial on it. I'm going to close out half of that as well. So just doing a partial on this one. So taking that one off, full profit, 50% of that leg there, just in case we do get a continuation push on this. I would like to potentially see a double top form, which means I can get that third back on again, and then when we come back down, I can take the whole lot off. But I just think this is due a correction, this yen. We need a correction on this, I think. It's been going for a long time now, and I think we need a little bit of strength in that yen. It's overdue because they've increased interest rates, but they don't seem to be doing it, do they? Right, so there's nothing else much to look at there. Monthly ranges, there's nothing here, gold and silver. So there's a few weeklies to look at, but I don't think they'll potentially reverse much today. So there's not much to look at there. RSIs we'll have a look at in a second. Let me just have a quick look at the DAX. Okay, so 5-minute opening range has just broken long. We're obviously gapped down today. So we have opened inside yesterday's range. But we are gap down, and gap down is roughly a third of basically ADR. So typical gap down, and quite often, obviously, we will come up and do those gap fills. So similar gaps and opens. There haven't been many examples of that sort of size of gap in the last 100 days, but 75% of those have done the gap fill, which is basically tapping the previous close. Just going to increase the sensitivity of that. Put that up to 25 to see how many similar gaps we've got there. 12, it doesn't make much difference, 67%. So there's a good probability of hitting that. But obviously, we are looking like we're reversing now. So there's one of two things happening. This is either a flag break or it is a descending triangle, which is obviously going to break to the downside. So looking up, we've got upside rejection at the moment. So I'd much rather be looking for shorts today. Super safe trade today. Think about what we're going to do today from a daily perspective. If we're going to go bear today, we're going to put in a lower high and a lower low. So if you're going to put a trade in today and hold it for the day, stop above that high and target to the downside. There's your previous session low and previous daily low, which is the same level today. That is the day before's low there. So if we're going to put in a lower low today, that's a good target. That gives you a 1.3R short right out the bat. But I'd wait for some bearish price action to come in. at least an inside bar to form, but we need some bears to step in before we start getting involved in this really today. Today, RSI wise, there is only the euro yen on the 4-hour extended, which is a downside extension. As you can see, obviously we've had that big sell off this week on the yens, as we know, or so big strength in the yen. So we've gone from extreme to extreme. So I'm out of obviously my yens now, apart from the US dollar yen. But yeah, that's your only extension. So there is an opportunity for a long there. The question we have with this yen is obviously, are we carrying on with the carry trade? We don't know, do we? But if you look at this high, so if you look at what we've been doing, obviously when we make new highs, got a new high there, new high there, new high there, new high there. If you look at the size of this new high that we've put in this week, it's absolutely tiny in comparison to everything that we've had before. So this is indicative of obviously a market rollover. Yeah. So what we will be looking at, even if we do push up, is putting in a lower high and then a lower low. So that would be your market structure reversal. First leg of that structure reversal's gone in this week. Your M pattern reversal up at the highs. There's your market structure break, broken down below those lows, broken down below those lows. So this low here, or this high here rather, is what we broke through here. Yeah, that propulsion gap was that high gone. That's been invalidated now. So potentially push back up and then push back down into that low and break. That would be your multi-week M pattern reversal, and that'd be your rollover starting. So we'll see how we get on next week on this, but I kind of like a bit of strength coming through in that yen at the moment, especially with what's going on everywhere in the world. Pound New Zealand, safe haven runs obviously going to the yen and the Swiss. Pound New Zealand's just broken down below the lows of last week. We're in the 2-week high territory at the moment. This propulsion gap did hold. It tried to hold again this week, but we slammed straight through it. So be looking for a push down into this high break, that propulsion move there, which they bought 3 times. That's your downside support. So right now where we are, it's signaling potential long. We've got a lovely hammer going in at the moment. So there is rejection going in, but the better place to buy this would be in that propulsion move. We know there's buyers here. Yeah, there's the buyers. They rebought it over and over again. When we get there, if those buyers are still in the market, that's where they're going to rebuy it. So that would be a nice little entry down there. Obviously, 50% retracement on that leg would then be an ADR move to the upside, which gives you a nice easy profit. So there's an opportunity on the Pound New Zealand that's extended there. It's not quite lit up on the 4-hour because it's waiting for that 4-hour candle to close. But if you look at it on the hourly, we're nicely extended and embedded down there now. But still, would much rather see a push back down into where they bought that area, which is 175 ADR. That's all we got really today. Nothing else. Daily RSI extensions is a couple. Aussie Swiss. Nicely extended to the upside. Australian dollar really strong at the moment. Got divergence there as no, you haven't actually. We had divergence there. It is divergent because that's flat and that's high. So it is slightly divergent, which is bearish. Obviously, we'll be looking for a push back down into here. So there's an opportunity for shorts Aussie Swiss. US dollar yen as well. We know about the DAX. US dollar yen, that's coming down already, so already in that one. But the DAX as well. Huge extension to the upside on the daily. We don't get that high very often. When we do, we get a correction. Yeah. So we're looking for some kind of corrective move to come in very shortly. How long, how fast, don't know, but very, very extended the DAX. So I've got a short on the DAX at the moment. I think I'm in 4 on that, 5 now. 5 short on the DAX now. So we've got one in profit. Oil, I might actually look at taking off today as well. Nice divergence at play there again. So divergence is a confirmation signal rather than a condition, but just tap back down into this area here, which was resistance, which broke through and acted as support. That's been supportive at the moment. So I'm just going to grab that as well, that oil, take that off, stick it in the bank, brings the week up to 2.3%, which is target, pretty much. Everything else is fine there, so I'll leave that lot. Right, so there we go. We've got bearish move on the DAX, so there's a nice potential short going in there. Lower low, lower high, lower low, potentially lower high. We've got 3 minutes left on this candle yet, but that looks like we might be stalling out of the highs there. So if you're in the 5-minute opening range break to the upside, you've got 2 wick rejections there and a bearish candle. I'd think twice about being long on the ORB today. Your better ORB break will be the short break. And obviously come down immediately. Target would be to test the previous session low, which gives you a bearish candle on the day. But not quite there yet. So if you want to take more risk on this, obviously, increase the risk reward ratio. That's 1.4. You want to go super aggressive, you can get a 1.9 out of it. So 1 to 9R. But that's obviously very aggressive. I'd be much more happy if I'm going to take a stop loss that tight. Looking at a break of that low there, basically. So this current candle low, we're selling into a propulsion gap here, but it's the 5-minute opening range. So it's not necessarily bulls, it's just volume. So that still gives you a 1 to 4. That trade there with a target at the session low. But we'll see how we get on. That's a safer trade today, but obviously less reward. There's no news today. We got Bailey speaking at 10 o'clock. That's it. All the news is done this week. Just going to recap on the news. We had CPI come out bearish on Tuesday for the dollar. It was a mixed result. So the forecast for the monthly, the core came out slightly down. Yearly was on forecast. So nothing bullish, nothing bearish there for the dollar. The PPI numbers came out ever so slightly inflated. The purchasers indexed, which feeds into consumer price index. Nothing much there. It was a very mixed bag. We got bullish, we got bearish, we got nothing. So it's all very neutral for the dollar. The GDP was very good for the pound, which is great. We were forecasting positive GDP. We got slightly better positive GDP. So if you look at the pound pairs yesterday, we had a little bit of a reaction to it, but nothing much you could do with it. Gosh, that came down a lot, the odd. So actually, it was a bit bearish yesterday, wasn't it? I thought that was bullish. I didn't actually pay much attention to it because I was looking at a news trade on it, and the news trade wasn't there. So I was trying to news trade it yesterday, but it just didn't give an entry. So well, that collapsed, didn't it? So market not liking the positive GDP on the pound. Then we had the US dollar unemployment, which again came out slightly bullish. So overall, if you look through everything yesterday, it was a fairly normal, mediocre day. In fact, the whole week, if you look at the week, just there, isn't it? We haven't had a lot of movement. You can tell because obviously with weekly ranges, we've only got the yens and they've only just tapped into their weekly range. Nothing's been extended this week. So really quiet week this week. Nothing much going on at all, unfortunately. Indices moved well though, especially the US indices. We've had some stupidly big explosive moves on the US markets. The DAX, the Dow specifically, absolutely on fire this week. Right, so I'm taking a short on that there. So we've got basically first candle, which is obviously your opening range, volume, bullish. We've tried to push up. We've got rejection at the highs there. Then the bears have taken control, lower low, lower high. Yeah, and then the bulls have tried again, upside rejection, lower low, lower high, and a bearish candle with a huge wick. So bulls dead in the water at the open. So first 15, 20 minutes of trading, they are out. So looking for bears to try and make a run on those lows. So continuing basically yesterday's bearish price action. So this reversal that we kicked in this week, there's your push. This is a 3-bar reversal. So push, pause, pull, bears in control, bears remaining in control. So we've got a lower high gone in with a double bottom yesterday. So they tried to push further. Bulls nowhere to be seen. So right now today, I would expect a lower high, lower low to go in if the bears are going to remain in control. Not particularly big. So just targeting, as I said, out the lows. So if you're looking at lower low, lower high on the daily chart, previous session and daily low will be exceeded. So that's a nice sort of 2.5 hour risk reward just to hold for the day. We'll probably add into it as well. So wait for some bearish confirmation. And then if we get a pullback, maybe into a propulsion gap or we see a 50% retracement, I'll be looking for some bearish price action to add more size in just to make that a bit more profitable and then obviously reduce the risk down with that as well. See where we go. Right. That's all I've got for you this morning. Nothing much else to talk about, is there? Is your close correct on the DAX? Yep. Happy Friday, ladder. Open today, choppy Friday. How do you know it's choppy Friday? We haven't had it yet. So yeah, we'll see where we go. Nice bear move going in at the moment. So pushing down nicely. So when we get to the open, we'll probably find some buyers in there. Obviously, there's been a big buy orders gone in there. They're probably going to be out if we break those lows, which will obviously give us a bit more of a push back down again. So yeah, session low is your next stop really to the downside. So just looking at the daily ranges at the moment, we're looking at 200 as an ADR. So that is all the way down here. Yeah, so that's ADR to the downside. I haven't got the ADR indicator, but there's your upside today. 200 points roughly to the downside brings us back into this accumulation, this buy area here. So there is potential, obviously, to get all the way down here if you want to hold longer. But if we're going to put a bear day in, that low is going to get taken out. Whether or not they get an ADR out of it, we'll have to wait and see. Depends how strong the bears are today. Obviously, there is a possibility that we rebuy the open, and this is just going to chop. Could even just grind up. You know, could do anything, couldn't it? But that's my trade idea anyway. Anybody got any pairs they want to look at specifically? Let me know. There's not a lot else to cover today. I'm going to go through all the pairs in the members stream this afternoon, 2 o'clock. So we'll be on for the members this afternoon, 2 o'clock. And we'll go through all the pairs. We'll have a proper recap of the week. Look at all the positions closed out this week. MT5, just so you know, if you're still using MT5, there's been a bug introduced again. There's a couple of bugs have been introduced. If you're using the beta version now doesn't like wingdings anymore. The main font's used by 99% of indicators on the marketplace. The one that allows you to put symbols into a graphical user interface that is crap and cannot support anything else. They've disabled the font for drawing, basically. So if you update to the beta version of MT5, you will not get any arrows. I can't do anything about it. They broke it. They need to fix it. They have released version 5501. Build 5501 came out today. I'm on 5495. We can try. Who knows? So that might be the fix. If not, I will have to recode. I mean, I can't believe they're not going to fix the one most important thing that all indicators in EAs use for drawing. Yeah? Wingdings font. Everything works on Wingdings. So let's update to the latest version and see if they fixed it. But anyway, so I can't do anything about it. It's not me, it's them. This is why we don't use MT5, because it's shit. Right, pound yen. Use MT4. MT4 doesn't break, ever. Literally never. I've been using this for 20 years. Doesn't break. Not quite 20 years, but anyway. Pound yen. So yeah, I've obviously covered this one. I'm out of all my yen short. Swiss yen, euro yen I was in. I'm in US yen still, but I've done a partial close. So one or two things is happening here. We are either correcting this leg, which is a 61.8 retracement into previous resistance, which is your monthly high. They fixed it, everybody. Oh, it worked then. Did you see that? The arrows came back and now they've gone again. I got really excited then. No, they still haven't fixed it. I'm going to have to put a workaround in. I think they've done this before. What they do is they don't call it a bug. They call it a feature. Usual stuff. So what happens is you have to recode because they go, we're not using this anymore. We're using this. Yeah. They don't leave fallbacks in like most software companies will, just in case other people are using something that they've been using for 20 years in a certain way. They won't leave that in place. They just rechange it and go, you need to reprogram everything. So we are, how many releases into this beta are we now? 5485 is release, isn't it? Oh, hold on. I don't know what the latest release is actually. December, November. So we're 1, 2, 3, 4, 5, 6, 7 updates into the beta release. I'm just looking at the change logs. And they haven't fixed this problem. So do with that what you will. So yeah, pound yen. We have obviously broken out the monthly highs. We are now going to retest that monthly high. We tested it this morning. And they bought it. So this blue line here is your monthly high, last month's high. So they've rebought last month's high. Large propulsion move to break yesterday's low. So they are selling back into that propulsion move, that breakdown. So if that breaks today and we put a lower low in, I suspect we're going to grind lower and come back down, obviously, and we're going to retest this area here. This is your Christmas period, though. So this is December the 19th through Christmas and New Year. So the market has tried in the new year to make a new high. If we get back down into here, could go either way. I think we're due a correction on all yens. The yen should have strengthened up towards the back end of last year. We've had 3 interest rate rises now on the yen, and they've got a 4th planned. So the interest rates on the yen will be at some point in the next quarter up to 1%, which is highest obviously ever for 40 years or whatever it is. So yeah, there's they are bringing themselves back into line with normal interest rate policy, which means that we shouldn't continue the carry trade, because the interest rates in Japan will start to get a little bit more competitive with the rest of the world, and there's no reason just to be basically putting your money in a low interest safe haven. You'll use the Swiss. So it should strengthen up, but it doesn't seem to be at the moment. The market has had decades of carry trade. They've been using this as an instrument to make money for decades, banks and institutions. Yeah. If you want to make long-term investment gains and you want your portfolio to look good, you sell the yen. So you just basically hold every currency but the yen and you will make money. It's like the stock index, S&P 500. Stick money in at the beginning of the year, you'll make 8% a year. That's it. That's the way it works. But that was because they had negative interest rates. They haven't anymore. So we should see normal strength starting. And when obviously we got that intervention on the yen, can't see because it's too far back now. But when we got that intervention, that was, everybody thought, the end of the carry trade. And for some reason, for the last 6 months, we've just gone straight back into the old habits. And that move there was Japan saying, I'm not going to have this anymore. Yeah, so I don't foresee any reason why they won't do that again. So if you look at the US dollar yen, and you look at the intervention, yeah, we're back at the post-intervention highs again. So what we've done is we've formed basically a range, and this is right at range highs. Yeah, so if that yen is going to power up, this is exactly where we should expect that move to happen from. So all yen pairs are going to do the same thing. So if the yen strengthens, the yen will strengthen, and even the dollar won't hold up against it if they really start to do that. Because the way that the Japanese intervene is by liquidating US assets, which is where most of their money is sitting. So by intervening and buying the yen, they automatically reduce the strength in the US dollar. So, and if you look at the divergence on the daily chart at the moment, you've got signs here making new highs with lower strength, meaning that the move is petering out. So all yens, I would say, there's a good chance that we're going to start to roll over. When? Who knows? Aussie New Zealand. Friend Aussie New Zealand. Inside bar on the DAX. We've got two inside bars set up. So we've got 1 minute 54 left on this candle. Okay, so we got 2 IB set up here. Yeah, so we got control candle, inside bar, and an inside bar. Yeah, this is a symmetrical triangle on the 1 minute chart, which is contraction. Yeah, which will, when it breaks, form probably the next 10 to 15 minutes worth of price action. So if this breaks to the downside, we should get that nice flush starting. That is if it forms an inside bar. We've got a minute left yet. Aussie New Zealand. So yeah, again, same thing with Aussie New Zealand. We've had massive strength in the Australian dollar. This propulsion move followed by 2 further propulsion moves. These are all news events, interest rates, CPIs, which have really bolstered this dollar. This is the first week that we've had an inside week, I believe. So again, pause in the market. There we go. So there's your higher high, higher low. Yeah, which we had an inside week there, look. But this is an inside week, and it is not just an inside week. It is a real indecision inside week. So 3 bar reversals tend to be push, pause, pull. There's your push, there's your pause. So again, I would anticipate a pullback into at least into this area here. Yeah, so 2-month low to form a range, if not a correction on this whole thing. So if you look at this, this is a weekly chart, obviously. On the daily, we're looking at pulling back into here, this propulsion gap. That'll be a test of your 200. 4 hour. Yeah. Maybe even that. I mean, that's your worst case scenario on this, I reckon. So we looked at this in the members stream on Monday because we got a couple of members in some squeezes on this at the moment. So yeah, it's correcting nicely though. Another reversal alert just gone in this morning. So there's your high, lower high, double top, double bottom. Yeah, so this is holding at the moment. If we can break out of ADR today, that's pretty much a confirmation of that rollover. How far we go and how fast, we'll have to wait and see. We've got news next week for the Australians on Thursday, unemployment rate. So obviously we've got the New Zealand CPI as well. So that basically that that Thursday in total, isn't it? So that Thursday next week is where that's going to get decided. If we get unemployment creating a bear move and we get a bull move on the CPI, so if that CPI jumps up to 1.2 or something, that's going to strengthen the New Zealand dollar, which will make that fly down. But could go either way. CAD yen is coming down nicely. So same with all the yens. I don't see any reason. I'm in the US dollar yen at the moment. I don't see any reason why this shouldn't continue in the way it's going at the moment. In fact, I might have put a TP on that. So I've just banked on that, obviously, this morning. If we get 150 ADR today, we are getting ADR days on the yens. I'll be looking at that high for exiting the rest of that position. But CAD yen is the same, pretty much. Market structures, excuse me, a little bit different. There's my CAD yen exit. I'm out of that already. But yeah, CAD yen, pretty much the same. I'll be looking for push down into these areas initially, but further, potentially. There's your 4 hour propulsion move. That didn't break a high. So it did break that high there, but it didn't break out the monthly. But monthly did become support. So down there is going to form a range, or obviously much bigger correction. Odd CAD. Let's see what that DAX did. New low going in the DAX. Yeah, so we did get the 2IB. There you go. So there's your 2 inside bar break to the downside. Want to see this hold bearish though. So at least below candle 7's low. And if we can break down below candle 5 low, that's your opening range breakout short just triggered as well. So your ORB today, your stop will be up here somewhere. So you're short on the ORB today. Hopefully you got out long break. But yeah, it's looking bearish today. Aussie CAD, it's just broken out the highs and it's holding as well. But also not making new highs, is it? So there's a short here. There's a short there. That one you'd be out of. So you'd be in from there. That's done 157, which is 3 ADR. So you're probably in from here somewhere. Maybe 3 or 4 trades with an average at the highs. So this area here, obviously, is where we sold again from. So this is your upside resistance. That monthly high has acted as support twice. So if we do break down through there, I'll be looking for some exit in that propulsion gap there. You've only got 4 trades on it probably. So somewhere in there. which is a 50% retracement on that leg. Watch these highs here, anywhere around here basically. And here is where you're looking for buyers to add back in. Long term, who knows? We have to wait to see what the news does. Euro odd. Longs on that at the moment. Bullish divergence. Actually, it's not. It's the same, actually. It's not bullish divergence. There's a long from there on the 4 hour and from there. Australian dollar again, isn't it? This is the thing. It's this Aussie's so strong at the moment. We really need some negative news on the Australian dollar. If you look at the recent Australian news, we've had tons and tons and tons of strength. But if you look at the news, it's not particularly strong. The last news events we've had, CPI was neutral. Nothing exciting there, ever so slightly bearish. Employment was bearish. The unemployment rate was good, so unemployment came down. But interest rates are still massively high. This is why it's strong. So if you compare the interest rates for the Australian dollar with the rest of the world, so if you look at specifically interest rates, you look at where we are with everybody else, the pound is the highest. The dollar, those are the previouses, the actuals. The pound is 3.75 along with the dollar. And then you've got the Aussie at 3.6. So as interest rates go, if you're going to hold capital elsewhere, that's one of the most attractive places to put it at the moment, isn't it? And it's also a commodities market. Commodities, as we know, by gold's price and oil recently up. So it's all good economically for the Australians at the moment. So we need some negative numbers to drive that Australian dollar weakness, but we're just not getting it at the moment. Not enough, I don't think. It is bearish. It's going the right way. So I think we are going to stall out. That Aussie New Zealand looks like it's going to stall. So obviously, if the Aussie New Zealand stalls, you'll find the euro beating the Australian dollar. But the problem with the euro odds specifically is the euro is neutral. Interest rates are at target. Inflation is at target. Everything's at target, which means there's absolutely no reason to be bullish on the euro. There's also no reason to be bearish. So what happens with neutral currencies like the euro at the moment is they just get pushed around by the cross. And the cross obviously is strong. So there's nothing much that the euro can do to fight this at the moment. But that, this will change. Things change, don't they? So, you've got to kind of hold it, really. There's not a lot you can do with it. Just do drawdown control if you've got loads on. But it has given 50% retracements, though. Look, I mean, every leg has had a 50% retracement on it. So there's been opportunities to get out, apart from this most recent one, obviously, which we haven't had a pullback on yet. Double bottom potentially forming today. Next week, we could break back that high and come back up and retest this area here, which will be a 50% retracement, that weekly high. Are you still using automated drawdown control? Yep. Yep, still doing DD control with the dash. There we go. It's not particularly weak today, DAX. If you look at it, though, I mean, we are bearish, but if you look at these wicks, there's a lot of buyers buying up every sell order that comes in. So might be a little bit rotational today. Still be looking at that session low as a target. Just got to be a bit cautious. I'm just going to reduce risk on this. So just halving the risk on the trade. Okay. So risk reward on that is now much bigger. So it's 5R basically. Are you still trading the ORB? Yep. But as you know, I don't let it go on auto. If it looks crap, get out. All it does is execute the trades. So, but prefer that short today. So there's your ORB short if you're trading ORB. Obviously, we're selling at the minute. There's nothing, if you forget all this price action that doesn't really exist, all of this stuff here is all pre-market. So your pre-market opens in Germany at 7 a.m., which is here, this line here. So that is your pre-market. So this is pre-market data, official pre-market data. So there is potential to find support at the lows here, but really that's your next level to look at. There's tons of support resistance areas in here. We had a really choppy end of session in New York. So there's loads of areas which you could say it could react at, and it probably will react at them. But overall, I'm looking for us to put a bear day in. So if we're going to put a bear day in, we have to invalidate that low. That's the plan. Do you have any set file for gold for the market reversal at CA? No. Same as everything else. Just use whatever you want, basically. Test it. Gold is I am trading gold now with ORB. Not with ORB, with position trading. I haven't had gold. So last gold trade for me was shorts here. Oh, I'm in at the moment. Look, I am short at the moment on gold. The one there. But I don't like to hold gold for long. Gold is a commodity, and as you can see, I could scroll. Yeah, you can get into some very hot water with it. So I don't like trading gold. It often causes big drawdowns because it's a commodity, it trends. So keep your risk low. As you can see, my risk is absolute minimal on it. But back test it. It's the same as everything else. As you know, if it goes up and down and uses market structure in a nice way, it will make money. If it squeezes, it won't make money. There's nothing you can do about it. There's nobody on the planet that can read the future and tell you what's going to happen in the news next week. So, you just can only go on historical information. And there are certain instruments that are better for position trading than others. Aussie New Zealand isn't great. Yen pairs aren't great. Commodities aren't great. Yeah, but equally, you can sit there and do a back test for a year and make an absolute fortune out of it. But next year, it will kill you. Same as anything. When's World War III going to kick off? No idea. It will, but I don't know when. Trading is about adapting to what the market conditions are, and the decisions you make based on what the market does is how you make money. You can't predict the future, and you can't use the past to predict the future either. You can use the past to find patterns, but patterns will repeat themselves with X probability, and there will be a Y probability in there, which is not the pattern, and that is where you need to act. And that's what position trading is all about. You look at your dashboard and you go, where are my Ys? These are the ones I need to deal with. I don't need to deal with anything yet because it's not big enough in drawdown, but these are my focal points. Anything else just gets put here. We deal with that. And you will find, more often than not, gold will appear there. Stock indices will appear there. And pairs like Aussie, New Zealand and yen pairs will appear there because they are historically will go off into squeezes. Reason being is because Aussie, New Zealand is a commodity pair. So when commodities rally, Aussie, New Zealand will tend to rally with it. So But up to you, what you trade. Everybody will get into things differently. But yeah, I'm in it at the moment. I'm one of those traders that will take risks, which is what trading is all about. But it's it's with I will get stung, and then I will say I'm not going to do that again. And then after a while, I'll look at it and go, it's changed, and I will get in and I will make money out of it. And then every now and again, it will sting me again, and I'll go, I'm not going to do that. I did it with the Swiss pairs. I didn't trade Swiss pairs. After the Swiss franc peg removal in 2014, I didn't trade the Swiss, I don't know, for 2 years. And then I looked at it and went, actually, it's pretty normal. I got in. What happened? We had a safe haven run and I got squeezed immediately. Actually, I didn't get squeezed because I wasn't position trading back then, but I took a load of loss because I just couldn't get the trades right on it because it changed its market profile, basically. Markets will only do three things. They're either going up, they're going down, or they're going sideways. That's all they do. So if you've got a mean reversion strategy and something is going up and down and up and down and up and down, you're going to make money. If it's going sideways, you're going to make money. If it's parabolic trending, you're not. I looked at it and it was doing lovely market structure and ranges for a year. I got in, went parabolic trend. The only reason I lost money is because I can't predict the future. But then again, I'm never going to be able to predict the future. So you just have to trade what you want to trade and deal with what you have to deal with. If, as a worst case scenario, the DAX goes parabolic on me, I'm going to make a 10% loss. It's going to wipe out a month's profit if it happens. That's the worst case scenario. Unless you hold it for indefinitely, and obviously it'll blow your account. But you won't do that. Shouldn't do that. Bullish reversal starting. So we've tested the lows, we've tested the highs, we've got no progress either way at the moment. So potentially pull back in, being controlled by the 20 moving average for the bears. We are bearish, but we're in a potential range at the moment because we've had no strength in any direction yet. But we are bearish overall. Aussie US, I think I've covered that. No? I didn't. So yeah, we're holding up previous highs at the moment. So we got a flag break long as the last move. There's a nice head and shoulders forming at the moment. Obviously, we need that neckline to break. So we need some weak news in the Australian dollar next week, or we need some strength in the dollar. Now, at the moment, basically what Trump is doing is kidnapping people, trying to steal countries, ruin every alliance he has, and start World War III. So the chances of the dollar strengthening, I think, are probably pretty low right now. But he might turn around next week and go, do you know what? Have your leader back. And Greenland, don't worry about it. And Russia, you're all right. And, and everything goes nice. And like he says, Iran are lovely as well. And he doesn't try to steal everything from Europe. That might happen next week. But at the moment, I think probably the most likely reason, the outcome is going to be weakness in the dollar. So it's a tricky one because you've got two currencies at the moment. One that is very, very strong. People buy commodities when times are in trouble. They'll buy gold, they'll buy oil. If we're going to start World War III, oil is going 500% parabolic. So, it's a difficult one. But if anything, you're in short and in profit. You shouldn't be in long on it for any reason. There's no trades on the hourly there that you would be in. If you entered in here somewhere, I suppose actually Yeah, you might have got stuck in from there, maybe. Yeah, I mean, as always, look for where the market's going. Where's the market going? Previous propulsion. Yeah. So if the head and shoulders breaks, yeah, propulsion. If we're going to do a correction on this move here, retracement, 50%. If we're going to go into, if this is an upside break that's going to fail and the Aussie is going to weaken, we're coming back down to retest this area down here. If, stay tuned to the news next week, basically. Oil and gold, I've heard you say never again many times, then 6 months later, back in. Yep. I'm in, but I'm in with super, super low risk. Look at my lot size on gold. 0.01. Yeah. It's just not interested. I mean, super low risk on it. So worst case scenario, it goes parabolic. I think probably the likelihood is that gold will continue to rally. We're out into those. We thought the all-time highs back here were unbelievable. So this run that we had here, this was the largest run in history. Yeah, in history for gold. We've never moved that fast, that far at all, ever in gold. And the correction obviously was a 38 retracement as always, which gave us our out. Happy days. But we've made all-time highs twice since then, and that's because there is just no faith in the dollar. And if everything's going to go to pot and all currencies are going to tank and World War III is going to start, what is the safest thing to hold? The commodity that everybody needs, gold. It's used in manufacturing, it's used in jewelry, it's in low supply. There's half of the world's gold locked up and sanctioned in Russia. We can't get hold of it. So there's just no reason why this shouldn't continue to go. The only reason this won't continue to go is if for some reason, somehow, everyone goes, do you know what? The dollar's the best thing on the planet to buy. I don't know how Trump would swing that, but that's the only thing that is going to make that work. But as long as it gets to where it's going like that, I don't care. But I'm low risk on it. Because, you get stuck. You get stuck in it when it does things like this, and you just can't do anything with it. You look at the propulsion gap on gold that's holding at the moment. Yeah, so every time we break a new high, the propulsion gaps hold and we just flip-flop around. So you get orphan propulsion gaps all the time. But when it does correct, it comes back down into previous propulsion. That is previous propulsion. That is previous propulsion. Just about. That's actually closed, but that's your next one really, isn't it? And that is still going to be a weekly higher low. Still bullish, but it can get down to there and still be bullish. So we'll see. We need some news on the dollar that is positive. And, it's just hard at the minute to get positive news. You've got an idiot in charge. It's just not going to happen, is it? Did you try buy-only strategies on indices and gold? Yeah. Yeah, you should be buy-only, ideally, until you get a bear market, and then you'll get killed. Same as everything. You can't predict the future. There's no point in trying, yeah? So if you go buy-only on stock indices, yeah, you'll be absolutely fine until you go into a bear market. And then you won't. Then you'll be dead. Yeah. Same with gold. Go long only. You haven't got bear market in gold for 2 years now. So, yeah. But go back further in time, yeah? So long only strategy there from April to September, you'd have been in drawdown. Depending when you got in, you'd have been out of that. You'd have been out of that. That would have been painful. You'd have been in there, not that painful, but yeah, so yeah, long only. But look at that massive bear market in gold there. This is a 4-hour chart, obviously. So you've got an extension there, extension there, extension there. That would have been quite painful. I mean, you'd have had outs on it, but whether you'd have taken them or not, because it's not enough profit, difficult to tell. You wouldn't have been able to exit that, so you'd have been stuck in that entire move there, which is April, May, June, July. 4 months. You would have been out of that with aggressive drawdown control, but it wouldn't have been fun, would it? You'd have been out eventually, but your drawdown on that would have been substantial. So, but yeah, most of the time, long only gold. But every time you look at long only strategy, you'll find stagnation, because with long only strategy, the problem with a long only strategy is you don't get the pullbacks. So if you look at an hourly chart on gold and zoom out, yeah, and you're looking to buy, you had an entry there, debatable, but you may have got an entry there. You definitely got an entry there. So in where are we? October, November, December, January. In 4 months, you've had 3 entries on it. Isn't bad, is it? But look at all the shorts you've missed. Short there, nice profit. Short there, nice profit. Short there, potentially. That's probably a bit low. You had a short there, nice profit. You may have gotten on that one on its own. So you've 1, 2, potentially 3, 4. So 50% of the trades you miss and you don't make profit on. That short there that would potentially be a profit, you'd miss that as well. So the trouble with long only strategies, and that is what I've found in my back testing, is you miss 50% of the profit. Yes, you may eliminate a couple of squeezes, but you're also reducing your profit overall for the year by 50%. So you're better off, in my opinion, taking the squeezes and taking the profit out of the squeezes, because sometimes the squeeze profit is actually bigger than anything. My biggest profits ever have come from the biggest squeezes I've had, where I've been squeezed and squeezed and squeezed and squeezed, and we've had a parabolic profit take, which has meant that I've got a 20 lot position, which suddenly hits 200% of ADR, and before I can even look at my P&L, I'm sitting in thousands of profit. Yeah, and those come from the big squeezes. So there is no right or wrong. Yeah, you have to make an informed decision on your own as to what you think is the best thing to do. I have no idea, because I don't know what's going to happen. But if you are more comfortable long only and taking less trades, do that. But don't blame me if we go into a bear market for 6 months and you just end up in drawdown for 6 months, because that's what will happen, isn't it? Backtest, always backtest. It'll only tell you what's happened in the past, won't help you. You know, if you can look at a pair, right? If you do a backtest from, let's say, 2016 to 2020, okay, on pound US dollar, for example, you'll sit there and you'll make a killing. Yeah. And in 2021, it went on a parabolic run with interest rate rallies, actually that way. And it would have blown your account if you'd have held one of those positions. Yeah. But for 4 years, it did nothing but make money. The market changes. So if you go for the last 4 years, gold, I should have been long only on it, and next year we get a bear run, you're stuffed. So get it both ways. You don't know what's coming. Same with stock indices. Look at the stock indices. S&P 500 is the prime example. Yeah, it's bull. We only buy it. If you buy it, I've got a set file for the Market Reversal Alert CA. It's on the website, on the blog, that absolutely kills it until there. Bang. But who could have foreseen what Trump was going to do? Yeah, I know. Let's put tariffs on everything and make America poor. Hang on, you said you're going to make America great. Yeah, I just started to do the opposite. Oops. Can't foresee it. Can't see it coming. COVID. Can't see it coming. That bear market. Everyone could see that coming, but we didn't know when it was going to start. Everyone thought it was going to start there, and all the short orders there got stuffed. They should have gone in 3 months later. Then they would have killed it. But we didn't know that bear market was coming. Biggest bear market in history. Why? Because we had the biggest pandemic in history, followed by the largest market run-up when businesses were closed in history, followed by the largest bear market in history, followed by the biggest idiot in history getting in twice and causing the biggest drop in history, although he only took credit for that. Look how much we've gone up. But you made it go down. Yeah, but it went up. Love it. Good old Trump. He's good for business. He makes things go up and down. What do you need as a trader? Movement. Can't fault it, can you? He knows what he's doing. He makes stuff move. DAX has stalled out. We are rebuying these lows, but we are also reselling these highs. So we're range bound for 30 minutes. I'm just going to break even that trade. I haven't got a massive amount of faith in this move at the minute. So it'll either go or it won't, but I kind of want it to go somewhere. I don't want it to sit around. So I'm not going to take that off. I'm just going to leave it there and see if we can get a move to the downside. Of course, you need to look for entry on market reversals. Yeah. Yeah, so obviously you only buy when there's strength and only sell when there's weakness. I just realised my camera's really bad today because I've got my blind open. I'm not going to try to shut it now. 0.1 what lot size adds so much flexibility. Many brokers don't offer them. Some are embarrassed to use small lots. Brokers, if a broker doesn't offer micro lots, change broker. I don't know many brokers out there that don't. And if they do, don't use them because they're rubbish. If they don't give you the flexibility to risk what you want to risk, don't trade with them. There's plenty out there that do. Most of them out there that do. If you're now short on the DAX, you might think it's finding support, but instead of closing, you can use 0.01 lots to reduce. Yeah. What do you think of Stacey Burke's trading method? Never heard of him or her. Don't know. Don't know. Send it. If you want, we'll have a look at it. If you're a member. If you're not a member, we won't, because we don't cover that sort of stuff in here. We'll cover that in member streams. But don't know who Stacey Burke is. Basically, whoever Stacey Burke is, I don't know whether it's a man or a woman, but they have a 50% probability of their strategy working because it'll either go up or down when they say it will. Doesn't matter what your strategy is. It will work or it won't 50% of the time, won't it? But I'm happy to have a look at new strategies. I will build an EA, I will back test it, and I will prove it right or wrong. And if I prove it right, I will use it. If I prove it wrong, I won't. Simple as that. Right, so we got indecision just crept in that last 5-minute candle. We've got an outside bar. We have a lower high going in and potentially a higher low, which is indecision followed by indecision, which means the market has absolutely no clue what it's doing. So 15 seconds left. You can't see that, it's behind my head, but there's a counter down there. So that's going to close as an inside bar. So we've got an outside bar, inside bar formation, which is just nothing. We've got an inside bar kind of outside bar. So that's literally all we're doing is we're just going inside, outside at the moment. So there's your range high, there's your range low. If we break down there, we're off to there. If we break up there, we're in rotation. So if we break up, I want out. If we break down, I'll make money. There's nothing I can do with it. You can't read the price action because there's just literally nothing to read, is there? So we'll leave it there today. So back this afternoon at 2 o'clock for members only. So if you do want to join in this afternoon, you can come and join the members area. You get all the academy content, plus you get the members lives, which we'll be doing this afternoon. So we'll do a full recap of the week. We'll go through all the position trades for this week, how the profit's been made this week, most of it today so far. And then we will have a quick look at next week. We're going to do some price action trading in the strategy test this afternoon. So just going through some drills, price action drills as well. So that's from 2 o'clock if you're about. Other than that, back next week as normal. So we're back on Monday afternoon for the New York session on YouTube. Obviously next week we've got a hell of a lot of news. I'll cover all of this in the members stream on Monday, but we've got the Bank of Japan interest rate decision, which I think this one is going to be a freeze, but I'm expecting them to announce more increases. We've got CPI, we've got unemployment, we've got just tons next week. So we've got some real volatility coming in next week. And obviously World War III might start as well. So if that kicks off, it'll probably be a good thing to buy oil. So if you have got any oil trades on, like the one I just got out of, yeah, if you've got any shorts on, certainly that's what's going to happen to oil. Yeah. Go back and look at the start of the Ukraine conflict. Can't even go back that far. It's such a long time ago. But yeah, there's war. Yeah. So, and we are on the verge of at the moment, aren't we? So 2-month, 3-month rally, basically. If he decides he wants to start invading other countries, because war is expensive and everything runs on oil. What do you need? Oil. Who's got it? Saudis. There we go. Right, I'll be back this afternoon. Anything you need, let me know. I'll be in Discord or Telegram. Other than that, have a good day, and I'll see you next time.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. Westpac buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run.